Hi there, and welcome to this live Zoom call. So, firstly, we're going to be looking at as sent by the criteria. So, first, we're looking at gold and what's happening with gold. So, gold, we go to the gold chart. So, gold currently, testing this resistant kind of a 5 minute trend channel right now. So, if I zoom out, testing currently a 5 minute trend channel, we can clearly see price retested every time it reaches this 5 minute trend channel support level. We are seeing some kind of a pushback up to this trend channel resistance. We're expecting the same thing to happen. Gold to rise from here as high as 1950, which is the first level, 1949 or 1950. And if that level breaks, we could see gold rising as high as 1956. So expecting gold to currently, just linger around this level. Not a lot of momentum in gold today. Lingering whole day nearly. If I go to a longer time, let's go to 4 hour. You will hardly see any momentum in gold. Gold was just stuck around this level for quite a long time, nearly whole day today, indicating, after the market's taking a break. Market's thinking what should they do with the next movement of gold. Gold really did fell quite strongly yesterday. About nearly all the way to 1866, guys. That's crazy. Nearly about 200 points, about 2,000 pips or so. So overall, gold currently, it does look like it might just go up because it's making higher low, but it's not like 100% yet that it's gonna go up. You might see gold falling back to as lows of 1934, and then maybe rising all the way back to 1957. So we have to keep an eye out on gold. Maybe we might see some kind of crazy moves before the market closes around 10 p.m. So next thing we're looking at is how to play stop loss and profit with proper risk management. So what I would say, for example, if you're buying a gold right now, it would be a perfect time to buy because you can easily put your stop loss just below this EMA, 50 EMA right here, and your take profit could have been at this level here. So if you were to looking to buy, so you can clearly see from on its own, the red part is smaller than green part. That should be your first. You should always look for your red part should be always smaller than your risk, should always be slower than your reward. And you can see it's 1 to 2 risk to reward ratios. If you invest £1, you're going to get £2, 2.5 out of this trade, which is what you call proper risk management. This is what you should need to do if you're trading, and this should be your end goal all the time. So let's take it here. So you can clearly see this is a quite strong resistance. Whenever price reaches this level, it drops. So if you, for example, let's draw a resistance line here, and you're looking to sell. So for example, price reaches here, you could easily put your short position here. So you can put your sell just above this wick, and your level could have been around here. So again, you can clearly see your red should always be smaller than your green for you to be a profitable trader. For you to really win the markets, you should always risk less, and you should always have your reward higher than your risk, because if you don't have your reward higher than your risk, you're going to lose out in the market. You're going to think you're in the long run, you are going to lose more than you could make. So over here, you can clearly see that we're going to be about 1.5 times in the profit. Even though if it does hit SL, I'll be only losing $1 by face TP. I'll be making 1.5 or nearly $2, which was your should mindset be. So you always need to use proper risk management when it comes to trading, guys. You can always use support and resistance as a tool for to put up your buys or sells. So for example, I'm using this support resist trend channel support line as a basis of putting my sell. So I know that price does drop. It could drop as low as this EMA, but if it drops below this EMA, that means it's better to get out of the trade because it could drop all the way down. But if I need to give some room for price to breathe. If I just put myself just above this EMA, on this EMA, what's going to happen? Price is going to whipsaw probably, most likely, and going to hit. We don't want that. We want price to give some room to breathe. So we want sell SL just a little bit lower than this, so it has some room to breathe. You can clearly see whenever price reaches this level, it does drop a bit before going up. So that's what we need in terms of SLs. We need some breathing room for our trades to breathe. Even though it does fall, maybe it's going to retest this level, then go up. But if it breaks this level quite strongly, then it's better to get out of the trade. It's better to get the SL hit of the trade, so we can look for re-entries at at certain points. So we can look for buy entries around here or maybe around here. So that's why you need to use we personally use support resistance mostly when it comes to sending trades out and finding out where it would be the good SL, because it gives us quite a good overview of how the market how much the market can go lower if you're buying, and how much it can go higher if you're selling. So that's how you can use the proper risk management, guide. That's how you can make money by always being one step ahead of the market. So we're going to look at RSI, but we only looked at RSI yesterday. We're going to look at something different, which is stochastic. similar thing like RSI, nothing, not majorly different, but just another way of looking at the market. So let's just pull this out. So let me just show you. Basically, it has the same thing as buy zone and sell zone. It just has two lines. So when a one line crosses, blue line crosses above the yellow line, it means there's a buy signal, and when a blue line crosses below the yellow line, it just means a sell signal. So currently, we can see that gold is sending a sell signal on a 5-minute time frame, but we do not use all these indicators on a longer time frame. It's better to use them on a better to use them on a longer time frame rather than a short time frame. So we clearly see a longer time frame is been heavily oversold. One indicator that is a good buy. Plus, we have a bullish crossover, blue line above yellow line. Another indication, it's a good buy. As long as the price is, blue line is above yellow line, we'll be looking for buys only. So if you're trading in longer time frame, that could be something you could use, as a reference point in your trading. So if you're, for example, right now as well, is heavily oversold, heavily overbought. So you might see some kind of a crossover, and that might see, gold dropping. So let's see how gold really plans out. In this gold trade currently, gold, as you can see, gold is dropping right now, may retest this EMA line here and might go up. So if you had your SL just around this EMA, would have been hit by now. But if it was a bit lower, you might see some kind of a support level here and might go up. So that's why you have to use proper risk management. Basically, this is how you use stochastic as well. As I said, when it crosses below, sell. When it crosses above, buy. But of course, you can't use on its own. You have to look for support resistance. So you can clearly see at this level, there's a strong resistance. For example, at this level, when the price crosses below, it's a strong resistance. So you buy or you sell here. Again, you can see a strong resistance, sell here. Again, a strong resistance, you sell here. But when the price switches it, you can see a trend, 50 MA support and crossed above, buy. 50 MA support, price broke above 50 MA support, so you can buy. Again, price above 50 MA support, you can buy. So all this you can use, all these tools, trend line, resistance, trend line support, resistance level, support level, with a mixture of other indicators such as RSI or stochastic, to be profitable in the market, to know really where market is moving, to really make money in the market. All right, guys, thank you so much for joining us in the Zoom call. Again, if you have any question, you can ask me now. I'm more than happy to help you guys. If you have any more question other than trading or any other indicator that you're trying to use, or any other trading related question, I'm more than happy to help you. We do not recommend. What we recommend is, when we send a signal out, that's what we send an analysis out with signal. So we want people to look at the analysis, learn from the analysis, then put the trade. So if they match with the analysis, then they can go ahead. If they doesn't match with the analysis, they don't really have to take the trade, because what we send is based on our analysis. And if customers or clients do the analysis on their basis and enter the trade, is much more preferable, because they know what's happening in the markets. They will know that is the right trade for them, yes or no. So that's why we always send analysis with our trade. We do not send just signals. We want people to start using their own analysis, learn themselves as well as they use signals, because that's the only best way of trading.